as possible in the state of Maryland, where Baltimore happens to be the focal point from a chapter perspective, to get enough applicants into the semester, which will start in May. And right now we've had various levels of interest from about 100 people, of which an ideal class size is typically between 30 and 35 applicants. So that's where our goals are. And the 3 recruiting sessions last week, we had 2 Maryland-based entrepreneurs who shared their life stories on what were the trigger events that made them want to stop being an employee and start something on their own. And we have those recorded, so we can get those to you through a variety of means at certain times for YouTube or other things later, since you weren't here. And we have a special guest speaker tonight, Brian Rozak from Social Toaster, which is a local Baltimore success story of a technology company. And you guys will get a chance to interrogate him, but he'll tell you what it's like to start and succeed in Baltimore specifically with a technology company. And then we can stay as late as you guys want to talk after for questions. And the goal is by the next Tuesday session to give you enough information about the Founder Institute and impress you enough with our fabulous mentors and CEO speakers that you'll want to sign up and take the class. And hi, Rob. Yeah, we have guests popping in today. So the first thing we'll do today, before we give the floor to Brian, is take you through the Founder Institute corporate overview briefing to give you background. If you haven't read it on the website, this is more up to date, and they're constantly updating as they get new materials. So any questions before we begin, or I'll take you through the briefing real quick?
Well, pizza's on the way too.
Pizza's on the way, and beer's on the
So
way.
this guy's on top of the important stuff.
So the 3 words that best describe the Founder Institute is they want to take Silicon Valley and its ecosystem for the technology innovation and spread it around the world. And right now, we'll show you what the world consists of. Believe in dreamers? Are all of you dreamers? Say yes. And this is about helping founders, much more so than helping founders' companies. So if you're starting a company or thinking about starting a company, this is designed to help you as individuals, CEOs of the company. Part of your dream? Can anybody do that?
Sure.
Demonstration. Okay, so it's a 3.5-month program. So in terms of what we expect, there's 14 different sessions, and this is after the recruiting, after next Tuesday, which would begin in our case for Baltimore in May. So we ask you to spend 1 night a week, then there's a few breaks between now and in May and September for holidays. But it's basically 1 night a week, which will probably be Tuesday night. And it's after hours, so you don't have to quit your day job. 14 classroom sessions total, which are taught by a variety of CEOs and mentors who you can see some background on our website. And we estimate that there's 25 hours per week that you'll spend. So if you have a 40-hour week day job, another 25 perhaps, especially if you're at the concept stage. Now, this varies depending on if you already have an existing company, and we support those startup early stage firms as well. So it might be substantially less if you have already put a company on paper and or have customers and prospects. And also that time estimate will vary if you're getting help from anyone such as co-founders. But that's sort of the average, the estimate which we think you need to put in order to get the most out of the course. So the tactics. So you think of the Founder Institute curriculum as a custom tailored MBA program in 3.5 months, but it's custom tailored to your business. Because you're going to get specific help from a variety of mentors and CEOs, ex-founders, to help you specifically as you work as individuals and as you work in groups. So it's not generic taking courses and learn about marketing and sales and finance. That's what MBA programs or real life work can supplement. This is how to make your idea and get it ready to put a pitch together to ultimately get in front of investors. Now, whether it's a variety, we have we're lucky in Maryland that we have a variety of sources, including government sponsored economic development and some technology specific, such as TEDCO, and Ron here will give you a little shout out at the end. We have DBED, which is also a state. We have a variety of funds within those programs, so that's one way of, one type of investor for early stage companies, which you'll be exposed to, and we'll have lots of speakers on that during the semester. There's also a pretty robust group of individual angel investors, and there's several, at least that I know of, angel groups that are sort of individual investors that get together and share risk across a variety of different programs. But in general, it's there's at least 3 or 4 that I know of that are technology driven. So you might be in front of one of those depending on what stage your company is and how much money you might need. But basically, you're going to work with a variety of your peers and other CEO founders who are going to give you feedback as you go through the 3.5-month program along all the way and all the steps. Structured approach, there's a variety of stuff in the marketplace. You've heard of the term incubators before, you've heard of the term accelerators before. Think of this as a structured learning program, but you don't have to quit your day job in order to do it. So an after-hour structured program, it's not an incubator in the sense that it provides facilities and space and test equipment and things of that nature, but there are a lot of incubators, including the ETC that you're in now, that do offer space. It's not solely an accelerator, which sometimes puts money in and gets you in front of investors directly, although there's a gray area there because the Founder Institute has just launched a new venture fund for special cases. So there's a lot of resources in the state. Think of this as another tool in the toolbox to get you a successful company. There's a variety of group projects and assignments for these classes. So, and then we vary the groups. So you'll get to work with, people, other founders who are sharing the same stresses perhaps and aspirations as you, and just with different types of companies. So you'll constantly get to work with individuals in your own classroom, in teams, and they're varying teams, and you get to work with different CEOs and different mentors as we go along. And this is really the most important side, is it's really easy to talk about the concept of the Founder Institute, but we've got the results. So mentorship and structured approach with peer support equals results. So if you start backwards, 45% of the companies that graduate from the Founder Institute in whatever chapter, whatever city around the world, 45% of them get funded, which is an unbelievably high percentage. So if you look at the venture capital firms fund, the private equity firms and investment banks and other groups, very low percentages. So we really prepare you well. 70% of them actually do better than their own business plan, and 86% of the companies that graduate have a successful, sustainable business. So that's a really high success rate. Right now, over 1,500 companies have been launched through the Founder Institute in the last 5 years. 1,500, with I think 11 or 12,000 new jobs created. So the results speak for themselves. Here's a few high-profile graduates you might have heard of. And by the way, we can send you this briefing now that you're signed up. We'll have your email address to show this up. Many said, oh, that was a picture of a day of wrestling. I'm going to mess this up. Let's see. Our fearless leader. Okay. That's the CEO and founder of the Founder Institute, Audio Wrestling. He's, have you guys ever heard of him before? He's a big-time Silicon Valley rainmaker, and he became famous / notorious when he started a company called The Funded. It was the first company that basically got the opinions of CEOs about how their venture capital firm performed for them after they got the money. So it was highly controversial the VCs and the private equity and investment banks, they like to think of themselves as a secret society that, can do no wrong. And the stories you hear in the paper are the successful ones, but there's a lot of ones that are not successful. And this basically opened up the door to what's happening behind the scenes in venture capital firms, and it still exists today to fund it. Economics. So if you come to one of these events, we just waive the application fee. So we want you all to apply. There's a course fee that if you're accepted as one of the 30 or 35 in the classroom, which varies by city. In our region, it's $9.95, which is one of the cheapest, because we want you to get started, and we're just started, so we don't want that to be a barrier. We do have special programs if that financial hurdle is a game changer for you, and you can contact us and we can talk about that and help you if you need that. So we don't want that to be the inhibitor for you signing up. And then the only thing that you really give up as founders is 3.5% of your equity down the road after you're successful. And that is split in 3 different pieces. The most important piece to you is you get to share with everyone in your graduating class. So you're giving up 3.5%, but you're also getting access to all the other founders in your class. So if one of them hits a home run and goes public, you can make a lot of money out of the 3%. And the co-directors and the mentors share in that as well. So everybody's got alignment of goals. We all want you to be successful. Yes.
So of the 30 or 35 people in the pot, how much do you get to share and everybody else if somebody hits the next Facebook or whatever? What's that?
So I don't have the
That's
exact
the real
numbers,
deal.
but if you send me an email, I'll give you the breakdown. It's something like a third between the co-directors, a third between the mentors who are CEO founders who participate with your group, and a third of the 100% of the 3.5.
The pool is about 30% for all the participating classes, or participating members in the class. So for example, and that's really the big part, a lot of you guys who probably looked at startups, the biggest way that people get really rich for startups is any sort of equity ownership, right? Because if an event like a IPO happens and say they go for $1 billion, even that fraction of a percentage now that you share into, that's huge, right? Not saying that's a realistic expectation, but even for a $10 million exit, you're still probably going to get a couple of grand check out of the class, right? And out of a class of about 30 or so startups, you're looking at typically a good estimate is about 3 exits possible.
And is the cost going to be the same as the Silicon Valley version, $14.99?
No,
No,
it's $9.95.
So it's based on our region.
Right, yeah, but since this is the first time we're opening, and there's a DC Northern Virginia chapter already, by the way, which has been in for a couple of years, but they're not active this semester. So we'll be getting some of the DC Northern Virginia people too, but we wanted to make it at the lowest possible price. And again, if there's any individual, come see us offline if that's the inhibitor. So we do put you through a predictive analysis test to test your personality. All of us took it, I feel, but it's basically to see if you have the mentality or the genetic flaws, I like to call it, to prepare you for becoming a founder and taking it all the way through. It's very visual. We have on the handouts one of the little samples. You can see the slides. So we do ask all of you through the application process to go through this 45-minute or hour exercise, and we do look at the results. So again, we can talk more about that later. So the important thing again is the people that are helping you, you're sharing with, and if your teammates and group mates and classmates succeed, you actually benefit from that. So there's 14 classes I mentioned here. It's broken into 3 different stages: idea, business, and launch. So you'll have different mentors, CEOs teaching potentially each of these different courses. And a lot of us are also teach. Rick's a full-time professor, John Stockton's Career Business School MBA program. I'm an adjunct professor. Leo's done many courses through many startups, and a lot of our mentors have been teachers as well as just giving advice. So you're not sure exactly who you're going to get, but all you know is they're very qualified and they've been a founder and CEO as well. So the outputs that you get are, first great thing is you want to lock in the idea. And ideas are sort of fluid. Just because you have an idea now doesn't mean it's not going to morph before you get here, but we want to make sure it's a solid idea. You'll actually form a corporation while you're in the middle of the class, which is one of the hurdles. We'll come up with a business plan. We'll actually start product in some cases until the last thing is we have a professional investor pitch before you get in front of these fundraising sources, whether it's Petco, whether it's an angel group, whether it's even a VC for some ideas that are more advanced than others. So the last thing is we'll prepare you to get in front of the money maker.
Can I ask a question? Do you have to form a corporation, or can you form an
To
LLC?
graduate, you have, well, some sort of
Some sort.
formal organization, whether it's a C, S, or LLC, it doesn't matter.
Okay, and not a nonprofit?
Definitely not a nonprofit.
Thank you,
This
okay.
is about for-profit, definitely.
Okay, thanks.
Yes,
But if you already have corporation and.
that's fine. That's fine. Yeah, again, so, you know, the percentage of those of you who have existing companies is probably, you know, substantially lower than 50%. I would figure 75 to 85%, something in that range. And it varies by session and by geography, so it really doesn't matter to us. It's, you know, when we learn about what stage your company's in, you know, you'll basically, if you have an existing company, you'll go back and revisit, for example, your original concept and idea. So you might have to spend 25 hours a week since you've already done that, but you'll get a chance to bounce where you've been so far off of all the CEOs and mentors. And so if you want to pivot or make some fine-tune adjustments, you'll have that flexibility. Yeah.
Yeah, are you like philosophically in line with like the Steve Blanks, Eric Reese's, and Peter Thiel's? I mean, what are we being taught? I mean, what kind, is it a lean startup approach? I mean, what are we talking about?
That's a really good question that I cannot
I'll
answer.
answer that. So it's going to be kind of comparable to like a Y Combinator program, except minus the actual investment up front. You know, the great thing, and when Y Combinator started back in like 2005, you know, it was absolutely groundbreaking, that structured approach to how to get startups, right? So really the value of something like this is when I first started my company back in 2005, you know, I didn't have half the resources that exist here. I started Rise, the Founder Institutes, you know, accelerators, incubators, and all those, right? So the biggest value and the way that it's structured is really to teach you how to be a founder, because I think quintessentially that's what is the hardest part of building a startup. It's really first-time founders. It's that old adage, if you don't know what you don't know, right? So a lot of the value comes out of the fact that you have people that have been there, done that, have the experience, also have the network, right? So the fact that we all share within that same 3.5% pool, it's in our best vested interest, as well as everyone else around you, to help one another, as well as your peers, to become successful. And I'm not saying everyone's going to make it to an exit or make it to, you know, some sort of acquisition or IPO, but at the end of the day, the more companies that we can help get there, the more that it's going to help, you know, everyone else and sharing that pool as well, right? So the structure is very similar to that Y Combinator kind of concept, like I said, minus the actual investment money. But where we supplement that with is, or where we supplement that at is the fact that we have connections into, you know, different institutional investors, angel groups, VCs as well. You know, I pitched about 70 times before I ever got my first seed round. So I still have the contact information for all 70 people that I got to do. So that's really the network that brings the value.
So if we're lucky enough to be chosen to spend our money here, then we're going to be in a situation where if we do what we're supposed to do, we should be in a better place to be able to put ourselves in front of, you know, VC investors and partners.
You'll be in a better position to be able to represent yourself. But if you put yourself there as well, you can also tap into our network. You know, it's the biggest thing I learned from starting companies is that if you try to tackle it all alone, you're more than likely going to have a harder uphill challenge or battle.
I totally agree. I've been there, done that.
Yeah, so if you want to, you know, just take the program in terms of the knowledge that you gain, create a better pitch, or et cetera, the program really is going to value you in the manner in which you want it to, right? For the network, for the actual information that you receive out of it, or for just the contacts, or, you know, the peer advisory that you can get out of it as well, or just to learn how to build a company if you ever decide one day you're going to quit, or maybe now's not the time. It's really whatever you want out of it is what you're going to get out of it.
But the other part of your question, if I was reading between the lines, is there a philosophy of the curriculum?
Right.
So the short answer is, again, I don't know the exact answer, but I can ask, but I believe the answer is going to sound something like it's proprietary to the Founder Institute, and it reflects a lot of the best practices from a lot of different input sources.
and I can try to fine-tune your answer, just
Okay.
ping me with an email, but it is proprietary curriculum, but it's based on best practices. So it's not like a secret sauce, but the collection of things that make up the 14 classes, it's Founder Institute proprietary information, so.
And the answer I'll give you is, it's really just centered around trying to help make more founders, teach you guys how to be founders, make better decisions, also give you the awareness that you need to kind of process.
And how it's different from let's say you just went to a university and took a course, is that it's specific to the 25 to 35 individuals that are running through that program. So you are very much encouraged to bring your questions and your specific challenges that you're facing week in and week out. And you have the network, not just the mentors that are in Baltimore, but the network at your disposal. So it's really a much different approach to helping you take those steps that Neil just suggested.
So let's go to the network. So, in over 100 cities in over 50 countries over the last 5 years, 3,700 mentors. So it doesn't mean even that you're going to have one of the Baltimore region local founders teaching a course. If somebody in France wants to visit the U.S. in the D.C. metropolitan area that happens to coincide with the class, you can get any of these 3,700 mentors potentially helping you. And if you want help, it's not limited to the dozen or so, which will be 20 or so by next week, the mentors in this region. You have access to the entire alumni network. So you're getting world-class expertise. It's not limited to this region. We also have over 250 partners, and these are the law firms, the accounting firms, a variety of technology firms that you may need hosting companies that you may need resources from to build your company. A lot of them throw in stuff for free, if not highly discounted, because they're members of our partner network. So there's lots of benefits you get from being associated with us, and these are not mom and pop shops in local regions. These are locally BLA Piper, an example of a law firm where you're going to get a superstar senior partner perhaps giving you legal advice for little or no charge. So these are very, very major players. In conclusion, now's the time. You're here. Keep your day job. And that's a huge differentiator for us, by the way. Start your dream company. Okay. So Adeo put the top 6 questions together that are usually asked, so we'll preempt them and try and give you the answers. And then, of course, we'll have many more questions. But do I have to share details about my idea? So some people are under the false impression that you need to protect your idea, and what that means is you don't get input from anyone else if you keep it to yourself. So if you have some top secret intellectual property, we're not saying expose it. You need to be protected with that. But at the idea phase for your business, if you want the help of the network, you need to share. So this is not a place for keeping everything under your pillow, because you're not going to get input from anybody, which defeats the purpose of having a network. What happens if the idea is not good? We're going to tell you if we don't think the idea is good. And then we'll help you come up with new ideas or modify the idea. We want you to have a solid idea before you progress out of that first phase. So it might be different than what you think you have when you walk in, but that's okay. But we do want you to have a viable business idea before you get out of the first phase. Will I have to join the bonus pool? So you do have a way to get out before you make that commitment to sign the warrants over, which I'm not sure of the exact timing, but it's somewhere before the 3rd phase. So you don't have to commit to that on day 1, even though you should want to actively participate in that. But there is an out clause somewhere before you get to the end of graduation if you don't want to follow through. Is 3.5 a lot of equity to give away? In the opinion of the Founder Institute and Adeo, no, it's a trivial amount. Is if you were going to give it to board members and advisors and friends and a variety of investors, it's a significantly smaller number than if you queued up, a half a point or percentage point to a variety of other sources, and you get to share in the upside of your team. So you put that all together, we think it's a number. Yeah, Ron?
if there's follow-on funding, 3.5% dilute?
You know, that's a good question, I don't know the answer,
What's
but
the
did you guys do that for
Well,
Moscow?
it's to protect the 10%.
So we'll check on that,
Repeat that, whether it would be diluted?
diluted or not with other rounds.
It would have to be.
I imagine it would be, the integrity of the 3.5 at the relative stage would be maintained, but I'm guessing, so we'll get you an answer on that. I hadn't heard the question asked, so I don't know the answer.
For how long will the?
I think it's to the
3.5
next rate, you know, to the next raise, so that's why I think it's,
Expect
What does it mean?
dilute,
right,
but just thought it-
What does that mean? Next rate,
next raise.
next rate?
So the first amount of money you raise from, whether it's an angel or some institutional financial organization, that's considered a transaction. So I believe the answer, but I'll confirm it for you, that the 3.5 covers that first transaction and your first raise amount, whether it's 100,000 or 150,000, and then, you know, the exit, however it's defined.
So it's only 3.5 of venture capital, it's not whereas the 3.5 of profit of the business?
It's equity, 3.5% of the equity in common stock.
Ownership. So if you don't take a second raise for some reason because you're still profitable, would it just go on forever?
So you exit, then they get 3.5%.
The short answer is I'd be guessing, so let me get you the answer. On the
Okay.
website, they talk about it in more detail.
So
Yeah, I
to
just-
my understanding, the 3.5% only converts into some sort of payout if there's some sort of
Successful exit.
exit,
Right.
so an IPO. So yeah, if you're in business for 10 years, there's still that 3.5%.
That's
It's
what
not
I'm
gonna,
wondering.
it's not gonna be a dividend paying type of 3.5.
Right, so exit
It's-
really is,
yeah.
there's three scenarios. And two of them, it's either IPO, which is the one that everybody reads about in the paper,
Yeah.
which sort of implies you're gonna be like a $100 million in sales
Right,
company.
which I don't-
But more, actually 3/4 of the exits have to do with M&A, in which that is loosely defined as either a financial transaction or a strategic transaction. A strategic transaction is if a company that's taking a bigger view of the same industry, similar industry,
Yeah.
acquires you,
Position.
and then wants to merge you and take advantage of your
Sure.
capabilities right away, versus a financial transaction is if it's some institutional financial services firm, such as the lower end, an angel group that's syndicated, a venture capital firm, private equity firm, or investment bank. So that's three-quarters of the exits have to do with M&A, either financial or strategic, and 1/4 or less has to do with IPO.
Okay, so there's really no point to doing this if you're not if you're not planning to take venture capital.
Okay, so here's the answer to that, which I heard addressed last week. So there's typically two types of broad classes of business in terms of the goals of the founders. One is to build a company and make a lot of money by an exit. Usually you need an exit to make a considerable amount, which we'll just leave it in relative terms of money. But there's also a group of founders that want to build what's called lifestyle companies, which they make a very nice, comfortable living, and they have no interest ever in exiting, which is fine, right? Right, so it's up to each founder what their particular vision is and how it relates to their family and friends and whatever they want to do. But, you know, to be a great founder, to build a great company, you know, these 14 different classes will help you to do that. How it's converted at the end is a separate issue. And you don't have to decide now.
That's helpful, thank you.
Yeah.
With, let's say you in this course and someone else in this course, and I may be good at business and we have someone that's a developer. Do y'all usually, you ever see like people in the course co-found together?
Okay, so I didn't hear the
So are you
question.
saying that, are you asking if co-founders can attend? the
Yeah, I'm
course
saying
together?
you, like.
Oh, you're right, so no, is the short answer. You can work with them behind the scenes, especially if you have an existing company, and we encourage you to do that, but, you know, we want the founder, CEO, by him or herself in the
Yeah,
class.
for the actual like the actual, formal courses where you come in and we all get together as a group, the answer is no. So full disclosure, we don't get paid. None of the mentors, none of, the co-directors, we take time out of our day to do this. The only way we make any money is if by some chance you guys have some sort of exit, then we get probably the same check that you and everyone else in your class would get as well. So this is absolutely voluntary for us. But on the flip side of that, say that you and your CTO or whoever you want to
No, I'm
have.
saying, no, the question was, like, I'm in a course and someone else in the schools. I don't know, we don't know each other, but, you know, we get to talking and,
Sure.
you know, I decide, hey, I have an existing company, wanna come on board? And, I mean, do you ever see those like type of things happen?
Where there's like a merger within the program?
Yeah.
I'm sure, yeah. Well, startup plan, I mean, everything's crazy, so.
Yeah, we can accommodate and help you with any of those scenarios you're talking about, but in terms of who's physically coming to the class every Tuesday night for those 14 sessions, it would be the CEO, founder, one of you.
I actually have a number of questions. First, I was going to ask if you finish up the thought that you were going at there. You were talking about basically the reason that you guys are doing this and the reason that you get paid. And you were about to say something else about it. But
Yeah, so I mean, like I was saying, you know, essentially the only way that we're gonna, you know, any of us, this is a true group effort in the fact that that 3.5%, even if you start a nonprofit, or even if you start another type of company where you want to do a lifestyle business, it would still be pretty awesome to own, you know, a certain fraction of the percentage of other companies in your class, right? Because even though you may decide never to exit, it doesn't mean that, you know, maybe a couple other people in your class don't make it to that point as well. And it's not like it's going to be a voting right at the stop. No one's going to, you know, it's just a very passive 3.5% equity. So, you know, like I said, this is absolutely voluntary, but we've seen the upside in the fact that, you know, it's a great incentive for everyone to kind of work towards the same common goal. It builds a little bit more camaraderie. Say you just gave 3.5% and, you know, founders who just took it. I mean, why would the mentors care to help you out that hard, right? Or why would they take a meeting with you after hours for a coffee because you and your CTO need some sort of strategy on developing out your product, right? So it's an incentive for us as well as your peers to kind of help and interact with you guys. And that's really what the program's about, is to, you know, to build a camaraderie between classes and then have everyone in terms of, you know, what information or experience that you've gone through in your own personal life, et cetera, come together and share that. You know, and I've learned the best people that probably give advice. Don't, you know, it's not going to be me or, you know, these older gentlemen, I'll say, but it's typically your peers, whoever's gone through, whoever's gone through, you know, a fundraising round recently, whoever's pitched, you know, they can give you really good insight that's present day, that's relevant to probably the experiences that you're going to be going through or currently maybe finding as a challenge or hurdle, right? So
The term that they use in the industry is we all have skin in the game, right? It's emotional connection, which is reinforced by having that legal entity saying that we're all shareholders in this. What?
To put it another way, you participate in this program, how many people are in a cohort or a class?
About 30-35 is what the goal is.
So you participate in this, you've got the equity arrangement, you're in the pool, you now walk away with a diversified investment portfolio.
Sure.
So if you have a partner, so one of us could get in, the other one might not.
No, I mean, it's really, for the formal classes, we typically want to have just the CEO founder there. But like I said, a lot of the mentors that, you know, we've spoken with, Brian's going to be one, you know, all three of us are as well. If there's something that's very specific to your company and you'd like a little extra time, there's no problem reaching out to them and having maybe a session as well.
I have a partner, and
Yeah.
we're co-founders of our
Yeah, but
company.
whoever the CEO is, that's what I'm saying. Is
It could be either of us.
Pick
one,
yeah, because you
Flip
get
a
one
coin.
chair, one chair.
flip a coin, yeah. But I mean, if you wanted to have like a impromptu side session, that's where both of you could be involved as well. But for the actual formal side of things, we can only have one of the founders.
Is it one chair? Can they share that chair?
No.
Can one person?
I asked that question.
Okay.
Even if they're really skinny, can you bring two?
No. I don't mean bring two. Can one come one week and somebody else come the next week? No.
Well, okay, so if you're sick, can you have a backup?
Right.
Place and take notes?
Yeah.
That's a good gray area question. I'm guessing that it's better to have a backup come take notes than not to have a backup come take notes. But we're gonna be watching you specifically. If you're sick a lot and your partner's here.
I could come to one class and my partner could come to another if there's one
We
chair.
don't wanna do that. You wanna bond with the group as an individual.
I'm bonding it.
There you go.
Bonding.
It all starts here.
My dog loves me.
All right, let's move on.
I see, before we move on, I see one question over here.
Sorry.
Yeah, I was wondering, so do you guys have any particular relationship with ETC or any of the other kind of spaces in Baltimore doing this co-working spaces, et cetera?
He has a
I would be
relationship with
very
every
mod- I
space
have-
in Maryland.
I've been doing, I've been, so ETC, I'm partnered with ETC.
Okay.
I'm also under Accelerate Baltimore, I'm one of the mentors as well. If you go towards DC, I'm on Accelerate DC, I'm a mentor for them as well. I know, Donna and Evan at 1776, WeWorks, Carl's the guy for the region, so that's the network that you're buying into, is the fact that, if you have that type of specific question, you go to the person who has that information, or there might be multiples, right? It'll give you options, or it'll give you a connection or an introduction.
So can you compare then the, kind of participation in this program with, say, just integrating your network already with those various, co-working spaces, hacker spaces, ventures, like, University of Maryland, for example, has, I did the entrepreneurship program there, and they've got some free advice. There's MTech, and there's a number of other such resources available that don't take any equity. Could you compare that a little bit? I know it's the hot.
In comparison, they all have their pros and cons. Certain accelerator programs, they might give you cash up front, but at the same time, it's going to be a class of 5, and if there's a lot of competition for it, what are the chances you're going to be one of those 5, right? Towards the other
The
one,
big differential is we're the only global that's technology focused in the world. Right, so if
And
you're-
it is technology focused.
technology or technology-enabled businesses. And so we're redoing the vision statement now to better define that, but we're not looking for consulting services firms. So if you have a product, that's, a clear technology company. But if you have, a dress shop that does fashion in a unique way due to the underlying technology, that might be fair game too. So business services, unbelievably dependent upon cool technology, that can pass as well. So global, you don't have to quit your day job, and a structured program, those are the big 3. And if you take it to the next step, is compare any of the other ones you're looking at, which we view as viable tools in the toolbox, right? You might need an incubator, you might need an accelerator. If you want to join this one, it's the access to the 3,700 CEOs and mentors around the world, where you're sharing the brain power of a lot of really successful people.
Question, just kind of related to that. So you give the founder institute, is it about marketing, managing? What field is it? What is that you train?
Well, we cover from concept to pitch. That's how we say it. So you're going to get a substantial amount of marketing and sales related, but you're also going to talk about intellectual property and software development and agile techniques. And I mean, you're the full gamut of anything having to do with a technology company. It's not limited to the subject matter of an MBA program. It's everything that you need to know. Having to do with all departments within your company, corporate, finance, admin, marketing, sales, R&D, business development, operations, solution delivery. We'll touch all of that from an organizational perspective.
So if I have a product that's, let's say, you give advice, if I have a consumer product, IT, so you can show me whether you can do business to business or consumer.
so the strategy behind how to sell it, how to market it.
Yeah,
Oh, yeah.
So just to give you an example, Rick runs the strategic management program at Hopkins Fair Business School. I teach strategic management, I teach entrepreneur finance. So when we look at a strategy, which we'll go over with you in the early part of the planning process, vision, mission, goals, objectives, down to key performance indicators that are applicable for your particular business, right? So it's not generic, how do you do strategy, it's how do we do strategy for your business.
Okay.
So we'll take you from soup to nuts, basically, through that process. Yeah.
Is there any follow-up beyond the 14 weeks?
We typically, from
Well,
my understanding,
you're part of the network
Yeah.
forever, right?
From my
It's not
understanding,
structured.
It's not structured, right?
from my understanding of the DC chapter, they typically, all the mentors, all the directors, they remain available. So if you're like down the road a year from that, and you're saying, hey, I'm trying to raise a round, right? My first
Well,
round.
the other thing is sometimes you get
Big
mentors and CEOs who are active with you, who you'll want to become board members, and you'll invite them. right? Board of advisors, board directors, equity investors, they may be part of an investment team that ends up giving you money. If you form bonds with certain mentors and CEOs that are really helping you, that you like, you know, a lot of times there's instances where the companies will ask the mentor to help them on a more continuous basis, but that's up to them, not up to us.
And on the global call just this week, they talked about this very issue, because what they're about is founders. You go through the program, you're a founder. That's why it's called Founder Institute. So you are a founder, and you're part of that network, and you're built right in. So when you travel, there's a very good chance you may be asked by one of the other founder institutes in those cities to
Right,
do what
you'll
our
become a
speaker's doing
mentor
here.
After you get through this, if you're successful and want to be mentored. So he sort of feeds on this. Okay, so I think we went through this. All right, so let's get Brian up here, because he's going to be the one to give you real life stories of a successful entrepreneur who did it in Baltimore. And Brian's a CEO and founder of a company called Social Toaster, which you might have heard of, but he'll explain it to you. And we're going to do the fireside